Hi, welcome to our panel on AI solutions in SME financing. We are a group of practitioners who see a ton of ways that AI can be used in financial services. So, optimizing credit underwriting, going sort of beyond just what machine learning has been achieving in the past several years. Secondly, improving onboarding, so powering unstructured and natural language chats or even telephony. Thirdly, powering credit underwriting co-pilot systems that optimize underwriting officers in their vetting and approval processes. But today, we want to delve into a specific use case. So how to improve KYB, like know your business, and business income validation so that banks can offer loans and savings products to more entrepreneurs. So I'm Lucinda. I'm the co-founder of Boost Capital. We are using technology to improve customers' finance experience and to reduce costs for emerging market entrepreneurs. And I'm bringing the I think I must have my own session running in the background, so I'm turning that off if you heard my voice for a second. Sorry. I'm bringing the point of view of someone who uses AI to power technology solutions for financial service providers. And joining me are Tom and Shuba. I'll let them introduce themselves.
Hi, everyone. So Shubha here, speaking to you from Singapore. I'm delighted to be part of this conversation. I'm responsible for the center's work across Asia Pacific, Europe, Middle East, and Africa. And I'm here today because we really are spending a lot of time exploring how to deploy AI to enable small businesses to join the digital economy. And we're investing in it more as a system enabler to reduce friction, improve underwriting, and expand access to capital for underserved entrepreneurs. And I'm excited to share more about that in this conversation with you. Tom, over to you.
Oh, I think we can't hear you, Tom. We're not able to hear Tom for some reason. So let me give Tom a quick intro while he's actually doing his check on what might be happening on his audio. But so Tom is the president and the CEO of Rafi Microfinance. That's one of the largest microfinance institutions in the Philippines. I believe they're serving over 600,000 clients. I think they have over 300 branches based in Cebu. But before that, he also has a ton of experience in financial services in the US and sub-Saharan Africa, in South America. And Tom has had a ton of different roles spanning retail banking to SME relationship management to microfinance. And we've been lucky enough to work with him at Rafi in the Philippines. So he's got a ton of experience in corporate governance, in how to regulate financial institutions, but primarily today, we're going to be speaking to him from the point of view of a microfinance organization who is deploying AI. Tom, did you manage to get your audio working? Oh, not yet. Okay, so we'll proceed on, but then Tom, hopefully we can get your audio debugged. So let me start by saying that a while back, Tom and I were speaking about how to like a challenge that Rappi was having, which was that they were struggling with a bottleneck in their application process. They were collecting a lot of KYC, so like know your customer, and KYB documents, know your business, and income validation documents. And they were doing this for small businesses who were applying for business loans. But all of these were paper-based, and the Rappi staff would have to take time to review them. And he was going to tell us more about how that was a barrier for his staff. So let's check in. Tom, how's your audio doing? Oh, I think we've still got. Tom, maybe you can try in a different browser and just make sure that your audio settings are okay. And if so, while you're working on it, I'll speak a little bit on Tom's behalf, because this was a challenge that actually produced an interesting tech solution from Boost. So Tom was talking about how basically there was a big bottleneck on the point of view of his staff. Like, we had created a digital onboarding funnel for Rafi in chat, in which they were using Messenger in order to onboard small businesses. But then, because there was such an increase in the volume of applications coming through, then it became an issue for his staff not being able to process enough applications in time. So what we did was we, in order to address Rafi's problem, developed a technology that would extract information from all of those IDs, from the business certificates, from the bank statements, all the documents that Rafi was having to collect, and eliminate the requirement for a manual entry. And we were doing this as a first step by taking those unstructured inputs, like an image file of a document, and rendering them into machine readable data. And we do that using optical character recognition powered by AI. But machine readable data isn't very useful on its own for a financial service provider like Rafi. So if we take, for example, like a data point like Juan de la Cruz, which OCR technology was extracting from a business registration certificate, what makes the data actually useful for Rafi is identifying that that data point is an applicant's name. So here, the AI would render the machine readable data into structured outputs by associating the data with category fields. So Juan de la Cruz is then classified as a name field, and that doesn't require a human being having to make that judgment call. We would then use AI to process those unstructured documents into structured data, like saving the FSP a lot of time. But if the data isn't actually verified, then its usefulness is still very limited. So AI has to also assist in detecting fraud within the documents and across an entire application file, so that then we've got readable, verified information for the FSP to use. But developing that technology was actually part of our cooperation with MasterCard Strive, where Shuba represents. And we had targeted empowering, I believe it was 10,000 Filipino and Cambodian entrepreneurs. We ended up engaging 48,000. So Shuba, I know you also, through Strive, support a ton of other organizations. Would you mind sharing with us some of the learnings about other AI solutions that you've seen being successfully deployed for unlocking that kind of SME finance?
Sure, Lucinda, would love to. I mean, Boost Capital was certainly a standout example for us. But that said, MasterCard Strive has supported a wide range of organizations deploying AI and digital tools to unlock SME growth across diverse contexts. These solutions actually go way beyond credit enablement. They build digital readiness, operational efficiency, and trust among small business owners. For us, it's about getting small businesses ready to be able to consume credit and really participate in the digital economy. Some of the most successful models combine AI with behavioral design, for example, local language interfaces and micro-learning formats to overcome steep learning curves and low digital literacy. Let me start with a solution that's not about credit directly, actually, but about preparing small businesses to be credit ready. MasterCard Stripe partnered with MTN, FinTech, and Arifu to launch Momo Coach, really leveraging the mobile network in Africa. And Momo Coach is an AI-powered chatbot that we deployed across Cote d'Ivoire, Uganda, Nigeria, and Kenya. Small businesses in sub-Saharan Africa, especially those impacted by the pandemic, have faced significant barriers to adopting digital tools. And it's important to kind of just appreciate that context. In sub-Saharan Africa, especially those impacted by the pandemic, have faced significant barriers in adopting digital tools. Just to give you a statistics, in 2022, only 27.65% of small businesses in sub-Saharan Africa had adopted digital tools to enhance their efficiency. So quite low. Momo Coach was really designed to address these gaps, and it did this by providing free accessible, upskilling content via popular messaging platforms. So first and foremost, really delivering bite-sized business education, acknowledging that this segment is time poor, via easy platforms they were very familiar with, like WhatsApp, SMS, and Telegram. And it covered topics like digital payments, inventory management, and online sales in a more simple manner that was consumable for this audience. The chatbot is interactive and multilingual, and that's dramatically helped improve learning outcomes. So over the course of deploying this chatbot during the program period, we saw over 1 million entrepreneurs engage, many of whom had never used formal financial tools before. And the key insight really that we took away from this is that AI can cut through digital literacy barriers, and micro content delivered in intuitive formats builds trust and enhances capability, especially for informal segments and women-led businesses. What started as a pilot is now mainstream, showing strong uptake and demand for AI-powered learning. That's sort of one example I wanted to underline. The second is a little bit more forward-looking, and that's about what we're doing at the center to source the next generation of inclusive AI solutions through an AI to Accelerate Inclusion challenge we launched. And MasterCard received over 500 submissions globally around existing AI solutions. This challenge was really useful in just surfacing what's already existed and looking to scale. And all of these solutions focused on small business development, financial inclusion, and gender equity, demonstrating a track record of success and really ready with additional funding and technical assistance to scale. I want to call out one in particular for this conversation, Quipu, which was one of the winners of the MasterCard AI Challenge. These guys are building technical infrastructure to bridge the financial inclusion gap for MSMEs in Colombia. Their AI-driven platform combines comprehensive onboarding for small businesses, an alternative credit scoring model, which uses machine learning to analyze mobile transactions, SMS, social media, sort of engagement behaviors and payment patterns, and uses all of this to intelligently disperse and collect mechanisms, to deploy both intelligent disbursement and collection mechanisms. What it's done, this approach, it's enabled lenders to assess creditworthiness using non-traditional data, which is critical for businesses excluded from formal financial systems. And from this use case, what we took away is that AI can really expand the boundaries of what counts as creditworthy by analyzing behavioral and transactional data, right? And Quipu now enables financial service providers to serve entrepreneurs who would otherwise be invisible to traditional scoring models. And with Quipu, I think the big point here is it can really drive financial inclusion, not just by automating existing processes, by redefining who gets credit, right? And I think that's really important. With the right data and design, even businesses with no formal records can be visible, credible, and bankable. And this is particularly important in markets like South Asia, where we work, and Sub-Saharan Africa, where informal enterprises dominate and traditional scoring models are falling short.
Lovely, Shiva. Thank you so much for that. And I believe we've hacked Tom into this call. So he's got a little bit of an audio lag maybe, but if you can go on and ask questions to him.
Amazing. Great. Hi, Tom. Great to have you.
Thank you.
So I had a question for you. So if you were to give one piece of advice to a CEO or CIO sitting in this audience, thinking about how to use AI to remove barriers in accessing finance, what would you say?
Well, I think the biggest challenge that we see also that AI, just like digital transformation was many years ago, it seems to be a buzzword. That there's so many AI tools out there, there's so many different solutions, but I think it's very important to have the big picture first, the strategy that what we're trying to solve, which problem we're looking to solve, and then find a solution as opposed to hopping from one AI solution to the other. We also find oftentimes that we're overwhelmed with the number of different new technologies coming out, especially in AI, almost on a daily basis. So my advice would be is to have the strategy down first, that try to identify the pain points and then match the solutions to them. But keeping in mind that this transformation journey and the move from traditional processes to incorporating some of the AI technologies to speed up the process, it requires quite a bit of communication and internal change management. And that I also oftentimes overestimate the amount of communication that it requires to make sure that these AI technologies are adopted and embedded to the maximum capabilities they actually can deliver. So in short, it's about being very selective. It's about looking at the big picture where it can contribute to different parts, and having the communication down to make sure everybody understands the reason and the purpose of these AI integrations.
Perfect. And thanks, Tom, for that answer. I think that another topic is that as we integrate AI solutions into financial service delivery, we do need to take into account that the people using that AI, the end users, like the small business applicants, how do they perceive that solution? It's not necessarily the same experience for them as a human interaction that they're accustomed to when they're like visiting a bank branch or when they're chatting with a live customer service agent. With AI digital applications or AI enabled applications, those merchants have to share information about themselves and about their businesses. And if they don't feel comfortable with that as a process, they won't do it. So, for example, in a survey of 150 merchants in the Philippines that boosted, we found that the concern about security of information is actually one of the greatest barriers to applying for a financial service digitally. And this is actually not just a Philippines trend. This is a very widespread regional trend. I dare say global, but I haven't looked up the surveys to see that. So ensuring that merchants feel comfortable sharing their data digitally, especially with like an AI powered system, is quite crucial to successful adoption. So like we as practitioners, we need to make sure that when we're using AI, we protect the customer's data that's being used to train that AI or being processed through that AI. So like at Boost, we use techniques like data obfuscation, where we transform data or we disguise sensitive data so that it can't be reverse engineered back to its original state, but then it still retains its utility for AI training purposes. Or if the AI is actually being used to process personally identifiable information, what we call PII, we have to differentiate between cases when that information is personal in and of itself versus personal in combination with other information. And I put up on the screen a quick categorization that we did of data that would be typical for a small business to tender as part of a digital loan application. And so if the AI needs to process that PII in itself, for example, like if we want to read a name on an ID card using AI, so we can't actually obfuscate the name, we need to actually pull the name. We need to make sure that we as practitioners are firstly getting the consent of the data owner, that we are clearing out the PII systematically from the system, and then also that we are only using AI, especially large language models like LLMs, that have very clear data processing policies that align with our privacy policies. So in that way, that we can make sure that we incorporate really the highest standards of data protection on behalf of those end users. So I just talked a lot about data privacy, but let me turn it over to Tom for a minute.
No, I agree. And in terms of data privacy, another thing I wanted to touch upon is, Lucinda, you mentioned about the interaction with clients and their familiarity or comfort with using an AI tool. So we at Rofi, we decided to take the path of high-tech, high-touch approach to when it comes to client engagements. So we're bringing technology, we're bringing AI-enabled onboarding and client applications, but we still have the touch. We still have the field staff or call center agent that actually oftentimes walking through the clients through these applications. So they're not alone dealing with the AI chatbot by themselves, because in microfinance, the small micro entrepreneurs might not be technology savvy enough or being comfortable enough to deal with these chatbots in the first go. So that's how the approach that we decided. But on a client protection and data protection principles, also we are very keen. And fortunately, the Philippine regulators, central bank, and our regulators are also very keen on regulating the industry when it comes to data protection. You know, how we govern on data and how we share with data with third-party agencies. It's quite well monitored and governed, fortunately, for the industry.
And Shubha, what kind of best practices does MasterCard recommend when it comes to being able to find that balance between protecting data privacy and still utilizing AI to its full capabilities?
Sure, listen, I think, both Tom and you made a point that, like, first to appreciate that it isn't just a back-end tool for leaders, but for lenders, but it's a front-end enabler for entrepreneurs, right? So we really need to think about, as it enables, how does it protect? So broadly, I think at the center for inclusive growth, but also broader MasterCard, I think we view responsible AI as not just a single safeguard, but a stack of services, if you will. And we've taken a very layered approach that builds customer resilience as we're looking at enabling inclusive growth, the conversation around credit and enabling credit with KYB and other things as a starting point, and ensuring security and trust at every level of engagement. So for us, I think the starting point of our best practice, the stack itself begins with privacy by design. So embedding data protection into the architecture of every AI tool that MasterCard, the business, builds or supports. We're heavily prioritizing human-centered design, and also really looking, at mitigating bias and data minimization, which is also one way for us to also protect, right? Like the leakage of data or any other vulnerability that it gets exposed to. Underpinning all of this approach, I think, is like a deeper belief that responsible AI starts with responsible data practices. It seems intuitive, but sometimes we just don't have the right rigorous systems in place to manage and take care of our data. So at MasterCard, that's very central, and it's almost also a starting point. We've kind of established internally a set of 7 foundational principles, and that's really what our approach is grounded in, that guides how we design, how we deploy, and govern our AI systems, right? And we make it a point to share with our partners. So a lot of effort and investment goes into this. So onboarding our partners into our foundational principles and approach, socializing it with regulators and policymakers, and helping them, sort of inform to shape overall a better framework for ethical AI adoption. So we do a ton of advocacy around this because we really care about where this whole space and conversation is going. Over time, we've evolved, sort of our privacy framework to embed responsible AI controls also into the design of all our innovations. We have, as an organization, a company-wide, a dedicated AI governance council that oversees AI activities. It ensures alignment with company values, and consults independent experts as well, because we obviously are not aware of all our blind spots. So we have a bunch of different systems and safeguards in place like this, internal and external. We also support enormous, as I said earlier, regulatory efforts that emphasize the need for cross-sector dialogue. Right? We can't just designing for governance of AI can't be done in a silo either, because it's so connected to so many of the sectors where the use cases are. So technologists, ethicists, lawyers, civil society, broad, and obviously all this over the last couple of years, broad engagement. At the center side, I think one thing that I'd love to call out is how we're working with our partners to build out the ecosystem is a $5 million grant we gave to Howard University to establish a new center for applied data science and analytics, just to support best practices, mainly around interdisciplinary training to build diverse teams that can recognize bias, which is an area we're really concerned about, research on fairness in terms of credit decisioning, public thought leadership, and transparency. All of this to really just evolve the space around AI systems to protect privacy while being fair. And I think the last thing sort of I'll say is that we think of cybersecurity as a critical layer as well. And so are doing a ton in terms of just through our innovation funds to share, sort of new innovations that are coming up focused on cybersecurity, really look for vulnerabilities, scanning, risk assessment, and threat mitigation. I'll pause there.
Yeah, and Shubha, you mentioned that big focus on cybersecurity. Is that in reaction to sort of market demand, or is that something where MasterCard is kind of preempting an upcoming need that you see on the horizon?
So we have been taking action preemptively, but we're really doubling down now, just seeing the data around scams and breaches, particularly in Southeast Asia, for example, where I am based. So now we're doubling down, but we've been sort of at this for some time, right? And really looking to both put in safeguards and systems and innovate as an organization, but from the center side, really looking at other innovations. So very, very cool example that I can give in this context, tell you like how we're trying to stay tip of spear, as well as had been at it for a while and double down, is through a recent challenge we ran, we surfaced an organization called Cresco Cybersecurity. And what the startup does, and I think it's really relevant to this conversation, is they've developed an all-in-one penetration testing solution for small businesses, which the center really cares about. And what the solution does, it enables small businesses to conduct penetration testing, like simulating cyber attacks, to find and fix security weaknesses in a simple way, right? And identify and track and address their various security vulnerabilities. What we're seeing is initially when we try to socialize with small businesses, the uptake is very low. It's just not on the priority list to invest in. But one attack can mean that they're out of business. But what also means is after that, if they have survived, then they're very quick to adopt these solutions because they understand like to design and protect both are important. So this was one that's very cool that came out of our EU Innovation Fund that I thought worth sort of spotlighting here because it designs to protect the small business while also encouraging them to adopt AI tools, really underlining the innovation that they have come up
That's
with.
awesome. Yeah. And Tom, what are you and other financial service CEOs talking about in terms of best practices for incorporating AI? Or are there particular resource constraints that you kind of commiserate about and say you've all got the same problems? Or conversely, are there some advantages that more grassroots banks like Rafi have compared to huge commercial banks in being able to more nimbly integrate new technology?
Well, I think we are still very much in the early stages here with the adoption of AI, at least here in the Philippines, when I talk about in the sector of microfinance. I think the main challenge and impediment is really about capacity. It's about understanding what the best use case is for AI and what is best to integrate into our processes. Our methodologies still tend to be very much manual across all the board on the microfinance institutions. So there's a lot of opportunity to enhance and improve processes by the introduction of AI. But I think to see that overall process and overall picture of what elements can be improved is still lacking in the industry. So I know there's a lot of tools out there, but very few of us actually start experimenting with it. Rafi is one of the on the forefront, but I know our institutions that in the industry they're still just talking about it. So again, it's a capacity issue. I think it's a knowledge issue that how to approach it, and I think that will come over the experience. I think the other one is about because AI is one thing, but as we talked about it all day today, is about the data and the data protection and the amount of data that we can use for the analytics and for the best. I wanted to say monetization, but the best value to get out of the data. And our data is not well organized enough to be able to apply AI tools yet. So those are the things that I see in the industry. But I think there's a lot of positive changes coming. So we had conversation at industry level. We have our data sharing when it comes to credit bureau, all the microfinance institutions reporting to that. And I think if that level, if we can incorporate partnerships with AI tools and share it with the institutions, so each institution don't have to come up with their own approach to analytics and integration of AI. I think that could enhance and that could speed up the process of improving the processes. So in a nutshell, it's really about still the capacity and the knowledge of what is the best use case for AI integration into microfinance here.
Perfect. Okay. Well, I know we're running out of time, so thank you, Shubha. Thank you, Tom, for sharing your experience with us today. I think we've got got some exciting ideas for how technology can sort of unlock opportunities for entrepreneurs in emerging markets. Just to really quickly recap on key points that I took away from this discussion, I'd say that we've got a lot of ideas about how AI can transform financial services beyond sort of the traditional machine learning that it used to do into KYB, income validation. But then when you're doing that, the importance of verifying data, doing fraud detections so that the financial service providers themselves trust the results and willingly integrate the new technology into their more established processes. And then I think also about using AI not just being about operational efficiencies gained. It can reduce manual work and from hours to minutes, but then it also has to be about increased impact for entrepreneurs themselves. And then I think lastly, we addressed end user concerns about data sharing and emphasizing that AI adoption really has to incorporate privacy protections and best practices that are even now being developed. So thank you again for sharing your experiences, and thanks for tuning in.